This is the Crowdcrux Crowdfunding Podcast with Sal Briggman, where we cover everything you need to know to launch a successful crowdfunding campaign. We speak with proven entrepreneurs who've raised money from the crowd and want to teach you how to do the same. Stay tuned because we're about to reveal how to launch your dream project. With your host, Sal Briggman.
Before we get started with this podcast episode, I want to take a second to introduce you to my friends at Fulfillrite. If you need help shipping out your Kickstarter or Indiegogo perks or rewards, Fulfillrite is the absolute best company for you. I've been working with them for a while and I can vouch for their services. They make it dead simple and take all of the headache out of shipping out all of those boxes, all of those orders to your backers and your customers. If you want to check them out, go to fulfillrite.com at fulfillrite.com. What up, crowdfunders? Welcome back to the Crowdfunding Demystified podcast. My name is Salvador Briggman, and today we have a special episode because we're not talking about Kickstarter or Indiegogo. Normally talk about how to get backers, how to get traffic, how to raise funds. Today we're actually talking about equity crowdfunding and also something that's really cutting edge, what's called a security token offering or digital securities. So this is, you can sort of lump into the field of like ICOs. So if you've read about that, you've heard about that on the news. And we're talking a little bit about that today from one of the foremost experts in this space. And this company, Crowdfunding X, and specifically Darren of Crowdfunding X, he has really led the way when it comes to doing Reg A plus offerings. So like working on the Elio Motors campaign, also doing Regulation D offerings, and really working with a lot of these new issuers when it comes to security token offerings. So today, he can share with you a very different perspective on this entire marketplace, a different perspective, I think, than what a lot of mainstream people are talking about out there. And also is going to give you the inside scoop on what is a good stage of company for going out there and trying to do Regulation A plus raise. Or how do you get actually involved in the security tokens offerings? What do you need to know about Regulation D? What are the things you have to have in order for getting your ducks in a row to actually do one of these financial raises? So in the past, with my book, Equity Crowdfunding Explained, which you can grab a copy at crowdcrux.com/equity. This book sort of went into not only Regulation A+, Regulation D, Regulation Crowdfunding, and sort of covered that territory. But one of the things that I did not hit, at least yet, with this version of the book are security tokens offerings. So in today's podcast, I hope that your eyes are open to this incredible new industry, which is blowing up just in front of our eyes. Like literally hundreds of millions of dollars being raised and no one's talking about it. My goal here is to bring you this information, to bring you this education, and you can do with it what you want. You can become active in this industry. You can decide to raise money yourself, or if you're a smaller company and you're just looking to do a Regulation D raise, that's also open to you. So first of all, if you're interested in learning more about this subject of equity crowdfunding, you can go and grab a copy of my book on Amazon or on Audible. You can get a paperback version, Audible version, ebook version at crowdcrux.com/equity. That is crowdcrux.com/equity. Just go there. And also Audible has a bonus where basically if you sign up for a free trial, free 30-day trial of Audible, you'll also get a free copy of the book Equity Crowdfunding Explained. So again, that's crowdcrux.com/equity. I think you're going to like today's episode. Really cutting edge, at the forefront of raising capital and crowdfunding. It's coming up right after this. Hey guys, welcome back to the Crowdfunding Demystified podcast. I have a really exciting guest for you today, Darren Marble, who's the CEO of Crowdfund X. He's been doing a lot of really interesting cutting edge stuff when it comes to equity crowdfunding. And I had him on the show because he knows way more than me about investor marketing, about this entire new industry. I really wanted to pick his brain here and also share with you ways you can incorporate equity crowdfunding. And if you are interested in doing this, how to get started. Welcome to the podcast, Darren. How's it going?
It's going great, Salvador. It's great to be on.
I'd love if you could just start here and maybe tell the listeners a little bit about you, because I know you've gotten into crowdfunding for a while now, and also you've been doing some different stuff in the industry. So if you could just share a little bit with listeners of who you are and what you do.
Sure. So I'm a serial entrepreneur. I'm the founder and CEO of CrowdfundX, which is a financial marketing firm based in Los Angeles. We market Reg A plus IPOs, as well as digital securities offerings, sometimes also referred to as security token offerings. I'm also a co-founder of Crowd Invest Summit, which is a producer of the Crypto Investment Conference, which is happening next week in Los Angeles at the LA Convention Center, and also co-founder and CEO of a new company called Issuance, which is developing a marketing platform for digital securities.
Okay, so that's a lot. Can we unpack that here? So Reg A plus, we're referring to a lot of companies have raised money on Start Engine and other equity platforms out there. You can raise upwards of $50 million with Reg A plus. You can offer this to non-accredited investors. What do you really help with when it comes to doing these offerings? Like, are you helping them get investors or present the pitch, or like, well, what are you doing for them?
In terms of the Reg A campaigns, there's basically three things that we will do with our clients. So we will help design their story. What is the narrative that's going to inspire retail investors to invest online? We'll produce that story, which takes shape in a number of assets. The video, which is the primary sales tool, the campaign page, content for digital marketing, social marketing, and then we will distribute that story to likely investors. Investors could include the company's customers, fans, followers, as well as likely retail investors online. And, Reg A campaigns are really a tremendous undertaking. Most of our projects in this space have been at least 4 or 5 months of work with, 2-3 months of planning and then 2-3 months of kind of marketing the live offer. And, there's a real misconception still in this space, which is that, my thesis is that you don't choose Reg A plus, but rather Reg A chooses you. And what I mean by that is, historically, if we look back over the last 3 years, the companies that have had success raising capital using the Reg A plus exemption have primarily been established businesses that have thousands, tens of thousands or more of paying customers. So these are operating businesses that are generating revenue, in some cases tens of millions or more than 100 million in top line revenue, maybe even are profitable, but at a minimum have some type of existing audience. And then we look at the deals that have failed. They tend to be companies that really don't fit that profile. They're startups, they're early stage, they're trying to raise their first money into the company. Those are just really tough fits. And we know from experience that even hiring our firm isn't a silver bullet for raising capital if you're not inherently a strong fit. So kind of those are the three elements. We design, produce, distribute the story for our issuer clients, and we've seen a trend of success with issuers that are established operating businesses that have some built-in audience of paying customers.
Mm-hmm. And does that differ from, Regulation D obviously is a completely different animal, not being able to solicit for some cases. How does that compare the stage of the company with Reg D versus Reg A plus?
So I think on average, Reg D is really a great exemption for most companies to start with, maybe regardless of their size. And, we're now very active in marketing digital securities offerings, or DSOs. And these tend to be, for the most part, earlier stage companies, and wanting to raise their first or second round of capital. And so when I hear of these companies and they tell me they want to jump straight into a Reg A plus, I will usually advise that that's a mistake, that they should rather start with the Reg D, which is fast, easy, and efficient, especially compared to Reg A plus. There's no cap on how much you can raise. Yes, you're limited to verified accredited investors, but truthfully, that's where the bulk of the investment activity is happening anyways in the, this emerging nascent digital securities ecosystem, which has basically been, around for a year or so, or not even a year. So, I think Reg D is really a great fit for most startups, early stage companies. You can get away with maybe $50,000 on legal versus for Reg A plus, you're talking $100 to $250,000 for the average 1A filing. It's just a night and day difference. And I think the better strategy is to go with the fast, easy, efficient approach and get some capital in the bank and then pursue a Reg A plus in success.
The other thing that's, I think you're really cutting edge when it comes to your agency is that you guys also work with security token offerings. I mean, this is really the basis, it seems like, of sort of your new approach here, the new vision you have for your company. Can you tell listeners a little bit about that? Because, I mean, even I think for myself, most mainstream people don't understand that security token offerings are huge now, not just like with cryptocurrencies, but in general.
Well, you're right. And so I'm going to refer to them as digital securities. I think my sense is that that's the term that will ultimately be lasting. But when I say digital securities, it also refers to security tokens. So same thing, just different nomenclature. So a digital security is a digital asset that is compliant with federal securities laws and run on the blockchain. And the reason I think that this is going to be a mega trend in capital markets is because digital securities promise liquidity for early investors. There's a number of secondary trading platforms that are either live or going live in the United States that will provide liquidity. They promise automated compliance, the ability for issuers to attract international investors, 24/7 trading, some of the same things you're seeing in the ICO market on decentralized exchanges. Those things are being replicated for compliant token offerings here in the US as a digital securities offering. And the beauty of a digital securities offering is really that any company can run one, right? So, what that means is that you could be a startup, you could be an established company, you could be a crypto or blockchain company, or have nothing to do with blockchain or cryptocurrency. You could be a $100 million a year manufacturing business growing 10% year over year and run a digital securities offering, selling a rev share, profit share token. And you do so because there's a lower cost of capital and because you'll be able to provide liquidity for your investors and shareholders in the deal. So I think really it's a mega trend in capital markets. We're really in the first inning here. And I suspect that over time, you're going to see public companies that trade on the NASDAQ or NYSE begin to launch digital securities offerings, again, because there's a lower cost of capital. It may be non-dilutive capital, et cetera, et cetera. And I think we're in the very, very early stages of what's going to be a substantial trend in capital markets, both domestically and internationally.
I had to interrupt this podcast episode because I want to introduce you to my friends at the Gadget Flow. Their product discovery platform reaches 22 million people per month. They've helped more than 5,000 crowdfunding campaigns thus far, and they have a social media following of more than 700,000 followers. If you want to gain access to their marketplace and list your own product, you can go to thegadgetflow.com/submit and list your project today. So I want to get into, what are like the costs that go into that, how much you can raise, all that kind of stuff. But before, I just want to ask you a dumb question here. This is like my hallmark of the show. When it comes to doing a digital securities offering, a security tokens offering, a lot of people think ICOs, and we tend to think of like, oh no, a lot of people defrauding investors, or like ICOs kind of has like a negative connotation now, I think. What do you say to people like that? And is that the wrong view, particularly, of doing one of these offerings?
Well, look, I agree with you. I think, honestly, when people hear ICO, consciously or subconsciously, what they really hear is scam, fraud, theft, and hacking. I think ICOs have a horrible reputation. There's been billions of dollars invested into pure fraudulent deals. And then there's been billions of dollars invested into, quote, legitimate ICOs that have, on average, lost 90% of their value in the last 9 months or so. So it's really been a raw deal for investors. And look, here's the truth. Running a digital securities offering isn't a trick. It's not a guarantee of success. And it doesn't mean that some issuer can go out and raise $10 million on $1 billion valuation or $100 million valuation just because it's a digital securities offering or security token offering. And so the saying goes, you can't polish a turd. And that still holds true for this space. And yes, there are a lot of turds and junk in the digital security space. I think it is definitely, that shiny new object. And whenever you have a new paradigm, it attracts all types of companies and people and investors. There's curiosity and intrigue, experimentation. People saw what the ICO issuers were able to get away with. They think maybe they can do the same here. But what I'm seeing, Salvador, that's really fascinating is the caliber of issuers in this space are really quite impressive.
Mm-hmm.
And beyond that, here's the most interesting thing, and this is what really gives me hope. The caliber of people that are the picks and shovels companies building the infrastructure to support a new era of digital securities. There's some really, really good people, some smart, savvy, well-intentioned people in this space. And that gives me more hope than anything else, because it's the caliber of people that will ultimately set the trajectory for this industry. And whereas you've seen a lot of highly questionable or scammers or bad actors in the ICO space, no doubt there will be some element of that here. But I think we're going to see a lot less of it, because we're talking about regulated markets. We're talking about compliant offerings and securities exemptions and federal securities laws. I just think those things, regulated markets, weed out a lot of the bad actors very quickly. And so that gives me hope that, this is going to be a very different market from what we've seen with ICOs.
So when it comes to doing these different types of offerings, just so that people know, like, this isn't like monopoly money, what are some of the deals that you've seen that have been just like really successful here, even ones that you've worked with, you can tell the listeners about?
So we've had the good fortune of working with a few of the more notable issuers, namely Kodak One, which is developing an image rights management platform for photographers using blockchain technology, as well as T0, which is building an exchange for security tokens or digital securities. Both of these are CrowdFundX clients, and they're unique in their own way. T0 was really unique in that they raised $134 million in their digital securities offering, selling a discretionary dividend. And I think that's good and bad. It's good for T0, right? It's a great deal for T0. And ultimately for investors to generate a return, T0 has to be very successful and do billions of dollars in top line revenue. And it's bad in a sense because, it's created this idea with the average digital securities issuer that they too can go out and sell a dividend or,
$134 million.
Yes, $134 million. And
that is insane.
Look, it's an exceptional deal. And, we were involved in the Elio Motors deal, which raised $17 million in early 2016. It was the first Reg A plus IPO ever. And not everybody understood that Elio had certain advantages that most companies don't. Namely, they had a 50,000 person reservation list, people that had put down deposits on these vehicles. And of the 17 million raised, 60% came from their pre-order list. The rest was digital marketing. And similarly with T0, they also had a number of advantages, namely that they've been in blockchain for years. Their founder, Pat Byrne, is, a notable executive and CEO of Overstock.com, which is a publicly traded company. So these guys were in early. Their timing was impeccable. They have real technology. They have a broker-dealer license, an alternative trading system, or ATS. They have all these advantages, and they exploited them. And so that worked out phenomenal for T0.
Mm-hmm.
But the point I'm getting to is I think other digital securities issuers need to be realistic. And what I mean by that is if they want to raise capital, they need to really strongly consider selling equity in their business. They need to go back to basics. So they can sell equity and tokenize after the raise, or they can tokenize their capital stack now and sell tokens that represent equity in the business.
Yeah.
And so
one quick thing I want to add here is, we're throwing out a lot of new terms like tokenize and digital security offering. I think anyone's head could spin that's just getting new into this space. I really want to get a clear idea here. So for the people that are investing in these companies, are these like blockchain nerds? Are they ordinary people that are just now being introduced to blockchain? Like, who are these investors?
The average investor in digital securities offerings are actually crypto hedge funds. These are funds that have $5 million to $1 billion under management. 80% of these funds are sub 25 million assets under management, or AUM. And then you've got 15 or 20%, which is still dozens, that are north of 25 million under management. So these are hedge funds. These are savvy investors. These are traditional asset managers that are migrating into digital assets, or they're a group of guys or girls that made a bunch of money in the heyday of ICOs and are now allocating some of their gains into this new era of digital securities. They're not really retail investors. So when CrowdFundX is engaged, like when we worked on the T0 deal or Kodak, basically we were serving as an introducer between our issuer client and these crypto hedge funds. And we've got trusted relationships with 200 of these funds. They know us. They perceive us as a unique marketing firm that's sourcing highly proprietary deals that they're interested in, at a minimum, taking a look at. So these are accredited investors. They're hedge fund investors with a unique focus in digital assets.
I'm speaking to the crowdfunders in the audience who have already launched a Kickstarter campaign, or have actually even successfully run a campaign. And the reason is, I think you will understand this pain point most. And that is, when you finally do raise money on Kickstarter or Indiegogo, the hardest part is not collecting the cash. The hardest part is shipping out all of those perks and rewards to your backers. It is a nightmare, my friends. It's a lot of spreadsheets, it's a lot of headache, and it's a lot of stress. That's why I recommend BackerKit. If you have not heard of BackerKit, they help you collect surveys, they help you collect data, and the entire fulfillment process is just so much easier and so many less spreadsheets when you use their software. You can check them out at BackerKit.com and use CrowdCrux for a special discount. So it's one of those things too, where I think if you have a bunch of hedge funds that are now experimenting with, cryptocurrency and, as you said, digital securities, it's almost like they're now looking for new quality deals, and there's a lack of them. It seems like out there, not enough people know that this is something that they can actually do an offering and gain access to some of these hedge funds. When in reality, like before, maybe they wouldn't even be given the light of day or the time of day. So it's kind of like a new way, I think, to also approach raising money and sort of getting your foot in the door with some of these larger institutional hedge funds. That's a really interesting idea. One of the quick questions I had for you here when it comes to the actual amount that you're raising, I think Reg A plus, regulation crowdfunding, we all have a clear idea. When it comes to digital assets, digital securities, what are you seeing here with an average raise, or how much should people expect to raise or get into this new area if they're looking to raise money?
Yeah, it's a little bit of a tough question in terms of what are the amounts that companies are raising, because really this industry is so nascent. There aren't even a dozen what do you call them, tombstones. Like, I don't even think a dozen deals have been completed or consummated. But I would say, in terms of the deals that we're seeing, the companies coming to us seeking partnership and assistance in raising capital, average companies looking to raise 5-10 million, maybe north of that in some cases, but I would say 5 or 10 million on average, with an exception here and there. Companies want to raise 20-30, and in terms of what's possible, it really depends on the fundamentals of the business. I think one of the issues in this space is that yes, it is kind of a new asset class, but there are a lot of companies that actually are aware of this asset class and attempting to do digital securities offerings. And one of the issues we're seeing is that a lot of these offerings are low caliber, meaning that they're distressed assets trying to polish themselves and put on a costume of a digital security, see if that makes them any more appealing. The other issue is that there are some really quality teams and deals out there, but unfortunately, they're attempting to go out at these egregious, even absurd valuations. So I think we need to see this industry normalize. We need to see better companies coming into the ecosystem, and those companies in general being more open to a reasonable valuation or more compelling deal terms, because they might be thinking of this like an ICO, when in fact, no, this is a business you're running. How are you going to generate revenue? When will you turn a profit? et cetera. So we need to look at more fundamental metrics in terms of how companies are valuing themselves and what's going to appeal to investors.
Yeah, I think you've given us a really good idea of sort of this new space which is opening up that I think we're really at the beginning stages of. Also, I think for those in the audience that are interested in learning more about Reg A+, you've also given some great advice there. Do you guys work with regulation crowdfunding at all?
We really don't. I mean, I think Reg CF has its own subset of issues. I think the biggest issue is that there's really no liquidity for those shares. There's no secondary market to trade your Reg CF shares. I think, it's a little bit of a catch-22 in that, yes, it's compelling for an issuer to go out if they need that first money in, and $1 million will get them somewhere, and they're tempted by these low legal costs. But on the other hand, going out there and announcing and beating your chest and we're doing a Reg CF campaign to raise only $1 million or up to $1 million, to me that sends a bad signal. And I think you've got this perception of maybe a low quality or again a distressed asset attempting to or struggling to raise capital. Yeah, so that coupled with the fact that there's no liquidity for the shares, to me it spells trouble or even disaster. You're basically, you're pulling in self-directed retail investors into what will ultimately be the absolute highest risk asset they could ever invest in. Oh, and by the way, you're illiquid. I don't think it's going to end well. So, Reg CF, the numbers really don't support that particular exemption being an exploding exemption, in a good way. I think ultimately the bulk of the action in this space is going to be with Reg D and Reg A plus long term.
Awesome. So I just wanted to get a few sort of criteria here going for those that are listening, sort of next steps to take. So the first is to obviously look at, if you have an existing company, then you're probably a good fit for Regulation A plus or some of the newer stuff that we talked about today. If you're a smaller company and you're interested in pursuing Reg D, and you guys also provide some help here with those services, what should you be thinking about, like the amount of money you want to raise, or how you're going to communicate this to people? What is it that you really need to have in line if you're looking to do a Reg D raise?
Well, first thing you need is a competent securities attorney. So I can recommend Robin Sosno, I can recommend Sarah Hanks, I can recommend Jeff Marks in Southern California. Those are just a few. Ultimately, a securities attorney will be your initial guide and advisor on how to structure the deal and put the deal together. And then beyond that, the issuer needs, at a minimum, an investment deck that might be 10 to 20 slides, a white paper, which might be 30 to 40 pages, a light paper, which is a consolidated version of the white paper that's maybe 2 to 3 pages, kind of more of an infograph, more of a visual summary of the deal. They'll need a pro forma, 5-year pro forma and use of funds. So what are your projected, revenue streams and expenses? And if you were to raise X millions of dollars, how would you spend it over the next 2 to 3 years? Pro forma cap table, who are the owners? And then the legal docs. Is it a convertible note at a discount? Are you selling equity? Are you selling tokens? So those are kind of the key marketing and legal assets that an issuer needs. And again, the securities attorney would be the first step, and then a smart marketing firm or marketing resources would be the next.
Awesome. Very well said. Well, thank you for coming on the show, sharing all this incredible information. I think this is great for someone that's just getting started now and wanting to learn more about this space, also to do their own offering. I'll be sure to include a link in the blog post to Crowdfund X so you guys can check it out. But thank you so much for coming on. And I really look forward to just seeing how this space grows and also how your company addresses some of the needs here. It looks like you guys have had some great campaigns so far. So looking forward to watching and seeing your progress.
Thanks, Salvador. It's a real pleasure and honor. Appreciate your interest and time.
Thank you so much for listening to this episode of the Crowdfunding Demystified podcast. If you're interested in learning more about Crowdfund X, I will include a link here where you guys can check it out at crowdcrux.com/crowdfundx. That is CROWDCRUX.com/crowdfundx. crowdfundx. And that link will take you to a special forum where you can learn more about these guys and also learn more and get in contact with Darren if you actually want to do one of these equity raises or you want to do a securities token offer. You can learn more about that at that link. Now, in addition, my goal here with the podcast and also the other material that I put out there is to really educate investors, but also educate entrepreneurs. To give you an awareness of the items that are at your disposal when it comes to raising money from the crowd. It's not just Kickstarter, Indiegogo, nonprofit crowdfunding. You can also use other things like equity crowdfunding. You gain access to a crowd of people, to get a bunch of people excited about your company, to become evangelists for your work. It's a really exciting time. And I think that we're just starting to barely scrape the surface when it comes to how this is going to transform our society in the same way that a few years ago, people were like, what is this Kickstarter thing? Like, what is this Indiegogo thing? It was a really new concept, but nowadays, a lot of the new innovations are coming from Kickstarter and coming from Indiegogo. So it's really going to change the types of products that are created, and also even the consumer and the consumption behavior, I think, is guided a lot by some of these newer platforms. So if you want to learn more about equity crowdfunding, getting into Regulation D, Regulation A+, Regulation crowdfunding, all that kind of stuff, you can go to crowdcrux.com/equity audio. That is crowdcrux.com/equity audio. And what that link will take you to is the Audible version of this book, where you can listen to the book if you'd like there. And also, if you sign up for a free 30-day trial of Audible, you will actually get that book for free. So this is very comprehensive, goes very nitty-gritty. I think you're going to like it a lot. But also go and check out some of the other episodes of this show. Thank you so much for spending a little bit of time here with me today, and I'll see you next time.